This is Chris Franco. Thanks for coming by. I'm going to walk through my concerns with a company called SoFi. I have a really interesting angle here that I have not seen some of the brightest analysts even bring up. And to me, it's been hiding in plain sight. And it's a reason why I would never touch this company, as my dad used to say, with a 10-foot pole. I'm not suggesting that anything nefarious is happening. I'm not making any allegations. I'm not calling out any individuals that work at this company. I'm just an individual investor right now who's observed something and I want to share it with you. So let me give you a little background here. During COVID, I started this Instagram page dedicated to one of my personal heroes, Charlie Munger. Something I've picked up over the years from studying the lessons of legendary investors is the importance of really having management that's going to tell you the truth and nothing but the truth. So help them God. Because if you have a management, and I say management, that could just be even the CEO. If the management is not being totally forthright with you, or they're misleading you in even a subtle way, well, they could be misleading themselves. And if they're misleading themselves, well, that's not good for the business. We can all figure how that would probably turn out. You want management that really, really, really has A1 integrity. I cannot stress that enough. I was curious about SoFi because I saw the meme crowd talking about it. I was aware of their business model, and I've worked in, how should I say this? I don't want to make this about my career, but let me just tell you honestly. So I have a business in New York City that I started when I was 28. So I'm very proud of it. We specialize in digital marketing, but specifically customer acquisition, which is a really important component for fast growing companies. I see things in 10Ks and 10Qs and investor presentations in a way that someone who doesn't have my specialization would not see. And that's what I want to illuminate here. Because I believe that's allowed me to see something here that seemingly many bright minds on Wall Street are not calling out. So let's get to the start of this. This company was one of the SPACs. Chamath was known as the SPAC king, and one of the companies that he brought to the market was SoFi. He posted this one-page thesis on SoFi. So here it is. It's a little pixelated because that's how it came from his Twitter account. But what jumped out at me and pretty much socked me in the face was what he wrote down here in quantitative. He says best-in-class CAC and churn allow for best-in-class contribution margins and rapid growth. Now, CAC, if you're not familiar with that term, it stands for customer acquisition cost. It is a crucial metric for a fast-growing company. It represents the cost to acquire one new paying customer, typically. So when you're going to put quantitative, he mentions the best-in-class CAC, but he doesn't actually say what the CAC is. If someone was working for me and they told me that, hey, the CAC, we have best-in-class CAC, and they gave me this document, let's say. I tell them to go back to the drawing board and come back when they have the specifics. I spent 3 years working with Goldman Sachs, acquiring customers. If I had turned this in, let's say at Goldman Sachs, and I'm using Goldman as one example, but this is the same thing for some of the retail companies I've worked with, women's fashion brands. I can't come to the CMO or the CEO and say, hey, we have best-in-class CAC. They'd laugh me out of the office. I mean, they might not laugh, but they might ask me if I'm okay.
Not acting like yourself there, buddy.
Because you cannot operate in business with this kind of vagueness. What does that even mean? Best-in-class CAC? Well, compared to what? And what is the best in class? Right off the bat, I'm like, okay, this is goofy. I didn't let this, ruin my day or, ruin my weekend. But when I decided to dig deeper into SoFi, I remembered this. So I'm going to show you SoFi's latest earnings report. Okay, here we go. So this is Q3 2022. And on the very first slide, practically, is where I found a big red flag. Not literally, by the way. It'd be great if I pulled down here and it's like, there's a big red flag. And I'm like, and I love red. The very first thing, and it really matters what companies put first in their decks, because it tells you what's the most important. Now, I'm not saying that's perfect every time, but if you look at Facebook, for example, they're going to talk about their MAUs and things like that. That's top of fold. So they say here they have members, right? They added 424,000 new members in Q3. I believe that's Q3, right? In Q3, SoFi is boasting that they added 424,000 new members. Sounds pretty good, bringing their total number of members to nearly 5 million. And this represents, as they say here, about 61% member growth year over year. Sounds awesome, right? Like this, oh, where do I sign up? Like, take my money, please. But notice how next to members here, I'm going to zoom in as much as I can. Now, you notice there's a little footnote there. If you see a footnote when you're looking at something that's for investors, take it seriously, okay? Because there's a reason that information is, one, being included, because they probably by law have to include whatever that footnote tells us, and they're trying to keep it a little bit out of sight. So let's take a look what this actually means. So down here it says, note, see footnote section for detailed explanations and definitions. Now, lucky for all of us here, including SoFi, I love detailed explanations and definitions. I am what you might call pedantic. So shout out to Jake, by the way. All right, let me get down here to the footnote section and see what this is all about, because it's the very first one. It says, and this is huge, we define a member as someone who has a lending relationship with us through origination and or servicing. Okay, that makes sense. It's also defined as someone who has opened a financial services account. Okay. Linked an external account to our platform. Huh? Or signed up for a credit score monitoring service, which, by the way, I believe if you go to SoFi Stadium, not every game, but they prompt you to do that. You just pull out your phone and it's free. It really doesn't require you to do anything other than just go through a couple steps. There's no transaction that takes place. You're just signing up for their service. Now, it says here, and this gets even better, once someone becomes a member, they are always considered a member unless they violate our terms of service. This means that our members have continuous access to our CFPs, our career advice services. Okay, so they're telling you why this is so great for the members. Awesome, I get it. But think about this. How, as investors, can we understand if they're able to, first of all, retain the members if everyone's a member for life, right? There's no churn because they don't allow you to churn. You are technically always a member unless you do something probably crazy or as defined in their terms of service. That is really, 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 really concerning to me. And I can't stress that enough. I don't know if everyone else gets that as much as I do, but that is like the word, what does member mean, right? Like when you think of member, I'm asking you individually. If I said your name, I'm like, you, Bill. When you think of member, what does that imply? And I'll tell you what I think. And I didn't write anything down. This is coming straight from the heart, straight from the brain and out my mouth. To me, a member implies if you're a member of something, you pay dues. There is a exchange of value there. You are transacting with them. If you're a member of a golf club, if you are a member, you could be in a fraternity. You could be in some sort of rec league. It could be a gym membership. I can't think of any membership where you are called a member where you are not required to pay anything. Well, in the world of SoFi, that's not the case. SoFi lives in some sort of weird alternative universe where being a member just means you signed up for our credit score monitoring service, or you signed up for one of their app, or you signed up for one of their services and you linked a bank account. Now, that does imply you're trusting them to some level, right? Because you're linking your bank account and they're able to access, and see how you transact, but you're not actually giving them any money. So right off the bat, like I said, this is just really, really sus. Now, you would think that someone would call this out. As an investor, how do I know that member growth means anything? So I'm going to go back to this. Let's go back to what this said here. Okay, so I'm the novice investor. Hey, members, we're growing, baby. 61%. Okay, but I have no indication how many of those people actually transact with the business, or deliver real value to the business in the form of revenue, or at least that's captured as revenue. There's nothing that would tell me that. SoFi also has a very robust business, and they have a lot of different services, and they offer this sort of like one-stop shop. And hey, over time, we'll be able to cross-sell people. It's sort of like the traditional banks, right? If you have a mortgage or you just have any sort of relationship with a bank, there's a lot of times those relationships begin with your first checking account, right? And then there's all these other services that as you grow and you advance in your career and life, there's other ways for you to extend or expand on that relationship. And the banks are set up to do that. It's a very smart business model, and it's one that requires a lot of trust. So they're really pumped. They added 424,000 new members. Now, I mentioned customer acquisition cost. What do you think they spent on marketing in Q3 2022? Because that can give us a very rough estimate of how much they're spending to acquire what they define as a customer or a member. So I'm going to pull up their 10K real quickly here. Bear with me. What we're about to look at here is the 10Q for the same quarter that presentation represented. So according to their 10Q, their marketing budget in Q3 was roughly $162 million. That is an enormous marketing budget. Good for them. So what is their customer acquisition cost? So if we're going off this number that they acquired 424,000 new, let's say keep my fingers, members, and they spent $162 million, the blended customer acquisition cost would be $382 per customer, per member. Now, let's also be clear about something. It's blended, right? So that's what they spent that quarter. Not all of that value will be realized within those 3 months. Ideally, most of it would be. That's the ideal situation here. But a brand trying to reach this scale and this, mass volume is going to have things that don't show up when you're looking at numbers like this. So consider the fact that they have a stadium, and every time someone's watching the teams that play in that stadium, they hear the SoFi Stadium. That has an effect, right? There's all sorts of things like that. It's an art and a science to try to figure out exactly how much things cost. As I said, this is a rough estimate, but $382 per customer as a blended CAC, that's expensive. Now, I wouldn't be as bothered by that if, let's say, every one of those members is transacting with their business, but that's not the case. There are certain members here that just signed up and got the credit score monitoring, and maybe in the future they will, and maybe the models that SoFi has put together indicate that we believe that in 2 years, these people will have spent this and blah, blah, blah. But until that happens, it doesn't count. So that's a big upfront cost for a member that's not actually a customer. I also question what Chamath said in that initial thesis about best-in-class CAC, because $382 per is not good. And they weren't at the scale that they were prior to going public, right? It doesn't sound that good to me just on the high level. But the fact that they're making a new definition of member is really sus. And I'm not saying it's nefarious. I'm not qualified to say if a company is defrauding investors or anything like that. So don't interpret it like that. What I am saying is I would never invest in this company, even if their numbers were great, because of that detail. And that's something I learned from Warren Buffett and Charlie Munger. All it takes is one just slightly dishonest move by management. And as an investor, you can get absolutely obliterated. There are lots of tales of investors who were very smart that got misled by management and got crushed. And so just little signs like this, it makes my antennas perk up.